Morning, everyone. Let's get going. All right. Last night's session on the S&P, another non-event. S&P, NASDAQ, pretty much across the board. We saw markets that opened up slightly lower, and from the late morning session there, really just kind of drifted up toward flatline around the close. Literally finished more or less flat on the day. Same sort of thing, very little leadership to look at. We had some data out. We have factory orders that came in at a slight beat at 0.7%. We continue to see good data coming out of the States. We had Apple that really traded well after their WWDC conference that they have annually every year. Market obviously liking what came out there, and the profit target was raised by Susquehanna after that. And really what the interesting thing was yesterday is we finally got a real sell-off in bond prices with a pretty significant move in the yield from about 252 all the way up close to 260 on the 10-year. So, I think that's really important. And the amazing thing is that when you get the bond price moving like that, and the equity price is literally doing nothing, it's something that you almost never see. So, I think at some point that will mean something. We'll continue to monitor it closely. But the thing that really sticks out from yesterday and the afternoon session there was really the move in the Treasury market in the States. All right, so moving on to Asia, we saw a little bit of a sell-off. Pretty much across the board, everyone except for the Kospi managed to hold up on the day. We didn't have anything really specifically leading most of the Asian markets. In Australia, we did have first quarter GDP numbers that came out at 3.5%, which beat estimates at 3.3%. And I think I probably got the market a little bit on the other foot there, thinking that the central bank won't need to, or will have more of a hawkish bias rather than dovish bias. So that's probably the reason for the sell-off there. In Tokyo, we saw some of the tech exporters and automakers that were up a little bit on the day, again with a little bit weaker yen, up to about 10270. One thing I did read last night in currency land is that 1 month volatility for the Japanese yen was an all-time low, and 6 month vols were also at all-time lows. So I think when you look at those kind of things, when you look at the VIX and you look at there's an incredible amount of complacency going on right now in global financial markets, not just in the equity markets, but in markets in general. And I think it really could catch some people on the wrong foot when things really do start moving, because I don't think that there's probably any hedging going on at the moment. All right, so looking at continuing on with the theme of the large caps outperforming the small caps. Here's just a chart kind of showing that outperformance relative to each other. You can see the year-to-date return of the large caps versus small caps, and it's been telling how well the large caps have outperformed the small caps. So I think this will probably continue to be the case, maybe until interest rates start to rise. We see interest rates starting to rise. That typically will start to underperform the dividend-paying stocks, and a lot of the large cap stocks will struggle in that environment because people are able to get yield elsewhere, so they're more focused on growth. All right. Corporate action today, we've got Sunlam that's going to release quarter one numbers, so nothing else to report there. Market data that we're seeing out, we had Japanese services PMI numbers. We've got Spanish PMI numbers, pretty much PMI across the entire Eurozone. We've also got Eurozone GDP. which comes out at 11 o'clock. I think that's going to be really important. In fact, I don't think that that's going to be that important because right now, tomorrow we've got the European Central Bank, the ECB, is going to be meeting to announce interest rates, and it's pretty much consensus that they're going to cut or do some sort of easing. And yesterday we also saw some softer than expected inflation numbers to really kind of confirm that. So I don't think that GDP number really, is going to be anything to actually move markets today. We also have later in the States, we've got MBA mortgage apps, we've got ADP employment change, we've got the trade balance, we've got the PMI numbers there, and we've got ISM non-manufacturing. So let's jump into the maps here. All right. Have a look here at Barlow's. We'll actually back out of this. We'll look at it on 2-year. I know we showed this chart the other day. I just wanted to kind of follow up on the support level that we talked about and how everything actually lined up absolutely perfectly for this chart. And this is kind of one of the classic setups, classic test of support formations that don't really get any better than that. It comes in at trendline support, it comes in at lateral support, and it comes in at support on the 200-day moving average. And we've seen a nice little reversal off of the back of that. I was saying to one of the other traders in my office yesterday, I was pissed off because I didn't really get as many as I wanted to anywhere down close to the 100 level. And very quickly pointed out to me that there's a hell of a lot of meat left on this bone, which is true. And I think the most important thing is, and the reason why I was only looking to nibble down there close to 100 levels, you want to see it prove itself first. Well, now it looks to have proven itself to bounce off of that level, to show that the significance of that level, and now it's actually probably where you want to start to take on size. So technically I think that's the best way to play the setup here. All right, let's look at Aspen. Aspen coming back up to test resistance on the on this flag, large flag, or whatever you want to call this thing, a descending triangle. Either way, it's coming right up to this to resistance on this massive piece of consolidation that we've seen going all the way back to March. When this thing breaks out from to the upside, finally, I think it will very quickly get to the 300 level, and once we get north of 300, it can probably continue to run hard. So watch this one closely. When it does break out, I think that there's probably going to be a lot of meat left on that bone. Impalas, I just want to show, we got a big rally yesterday, or kind of almost the last couple of days in the platinums, possibly on a little bit of relief coming now from some of the mining talks. You've seen Impalas here. It's pushed back up to 115 on the close yesterday, and really probably, let's call it 116, 116.50, somewhere in that neighborhood is where what was support now becomes resistance, comes into play, and I think we'll be looking to see how that plays out. If it fails that level, then it'll really kind of confirm its significance and opens up the door for that massively lower target. All right, CFR. Yeah, CFR has been actually incredible. It's been one of those charts where one of these clearly defined ranges, between, call it $100 and 110, and no one seems to be talking about the fact that this thing's broken out. Almost no one that I know is really playing the long side of this thing, and it's just so. When you enter into consolidation, I should draw this a little bit differently and run it something like that. But I mean, that's an amazing piece of consolidation that we've seen out of CFR, and when you consolidate for that long and you break out, I mean, it only makes the breakout more significant. So this thing is setting up for a target of about 120 Rand, and it's just kind of cruising up higher here with no one really paying any attention to it. So watch that one closely, as I think it can probably make a quick move up there to that 120 level. Next one we'll show is Telkom. back down to a year, really making a breakout in yesterday's session after numbers that came out sometime last week, and it really you can see there quite a beautifully symmetrical pattern, setting up for almost a 5 rand move to the upside, which would put us up close to 45 rand on the breakout. I think to be safe, let's call it 40 or $4 because of let's cut the wick out and call it $4. But 44, I think, would kind of be the minimum target here on Telkom on that breakout. And then the last one I'm going to show is Coronation. Coronation, who some say the most expensive fund manager in the world, is making a beautiful little head and shoulder pattern here. You can see there I had the right shoulder a couple days ago on the MSCI Global Reweighting and starting to pull back a little bit off of it there. I think we really need to drop probably 97. I'd actually feel better if it dropped 95, but if we drop 97, then I think there's real downside here. We could probably come back down and test support levels from where we really broke out and then kind of consolidated above here around 85. And that's it for today, guys. Thanks a lot.